You know, normally here on Velshi, we pepper the show with economics. Feels like we've been talking a lot about economics recently, particularly because of that One Big Beautiful Bill Act. But there's some other economics going on. We want to talk to you more broadly about it. We got a new jobs report on Thursday. On its face, the jobs report shows a pretty healthy situation. But as always, we like to go behind the numbers, and that's why I've got Caleb here joining me to take a look at the current state of the economy. As we always do, the good, the bad, and the ugly is Caleb Silver, editor-in-chief at Investopedia. Caleb, give me a broader picture than what we've been talking about with this one bill.
Yeah, the headline numbers look pretty good. If you look across the economy, you hear the same thing from Fed Chair Powell. Headline numbers are great, actually. The stock market at record highs. We have more 401k millionaires than we've ever had. We had more millionaires produced last year because people were invested. Stock market came all the way back from that big dip in early April. So that is contributing to the wealth effect. And then you look at the labor market. We did have 147,000 jobs added. That's right on average. And the unemployment rate, 4.1%. Again, top level looks really good. When you get under it a little bit, like that soft serve ice cream with the sprinkles, you take your first couple bites, really good. When you get under it, it starts to look a little bit worse. When you're looking at inflation, though, things like egg prices have come down, gas prices have come down. That's put more money in people's pockets. That has made inflation actually much tamer than we thought it might be because we've had more smoke than fire when it comes to tariffs so far.
All right, and that may change on Wednesday, but that's the good. Let's take a look at the bad about the economy.
Yeah, the economy's slowing, no doubt about it. We got the first actual read on first quarter GDP. The economy only grew 0.5%. So that's a big slowdown from 2.4% at the end of the last quarter. Why is that happening? Less manufacturing, less construction, less industrial production, companies pulling back, small businesses pulling back because they fear the worst from tariffs. We haven't seen it yet, but that's what's happening there. Home affordability, you just mentioned it. Home prices at all-time highs right now. Home affordability, the amount it costs to stay in your home, buy a new home, rent your home, that keeps on rising, putting pressure on everybody's finances, and that leads to an increase in consumer debt at record highs, Ali. Credit card APRs are around 24% right now, and once we had the resumption of those student loans, that put a lot of pressure on people. That's taking a lot of money out of their pocket, and we got delinquencies starting to rise.
This is why you saw the New York mayoral primary go the way it was. Affordability is a real crisis.
People don't feel that great, right? The real feel we talk about all the time, not so good. Now we get to the ugly.
Let's take a look at the ugly. And as I said, this week is going to be interesting because on Wednesday, in theory, one never knows, but in theory, those tariff freezes are expiring.
Yeah, those are expiring. We don't know what deals are going to be put in place. We know the president has sent out some 12 letters to countries telling them what they are going to pay. But we've seen a lot of this over the last 90 days or so. We haven't really seen the effects. This could be dramatic, or it could be, again, more smoke than fire. We'll have to see. The tax bill cuts, you talked about it already. Big cuts to subsidies, especially for lower income people, Medicare, the SNAP programs. And we're going to have probably a lot of people without health care going without it because either they're going to be off the rolls or not be able to afford it. There's a lot of uncertainty in that tax bill. And then when you have a record high stock market and record high asset prices with homes, you have the people that don't own any of it. If you're not an investor, if you don't own stocks or assets like homes right now, you have been left out of this prosperity, and it's only going to get worse going forward. So we're going to see a widening wealth gap. People are going to get very unhappy about
this. Is very clearly the widening wealth gap that you see because you're talking about stock markets at record highs. So if you've got stocks, if you own stocks, half of Americans do, you're doing well. If you own property, you're in good shape. If you've got a locked-in mortgage, but if you don't have those things, you're trying to get a mortgage right now, you're looking at rates of
6.6% right now, and home prices on average around $400,000. Not here in the Northeast, not out on the West Coast, but that's still a big climb for a lot of people. Can't afford that first home, can't get out of the home they're in because they don't have enough to buy the next one. So you're seeing a lot of good things on the very top level, but it's not boiling down to most people in this country.
And it's an opposite wealth effect with these tax cuts because if you're on Medicaid or you're getting SNAP, you're going to become less of a contributor to the economy in terms of having growth go in because you don't have anything. There's no surplus.
That's right. There's no surplus there, so you won't be spending as much. We rely on wealthier people to spend to churn the economy. That's that trickle down you were just talking about a couple of segments ago. Doesn't really happen. And when the bottom half doesn't spend at all, that's when you get a real economic slowdown, potentially a recession. I'm not predicting it because we've been able to avoid it, but a lot of uncertainty here on this column.
Always good to have you here, my friend. Thank you. Caleb Silver, editor-in-chief of Investopedia.